Hey everyone, Dan Mortimer with the Brooks team. I'm the high-rise sales manager here, and I'm actually sitting down with our company founder and owner, Jim Brooks. The main reason that we wanted to sit down is we always get asked by clients, where's the opportunity in the Las Vegas market? We see how strong the demand is in the single-family housing market, but we do a lot of analysis of all property types here in Las Vegas, and we really feel like there's a lot of opportunity that's being overlooked by a lot of prospective buyers. And so we just kind of wanted to talk about some of those opportunities, what we see going on, and how this exciting city is going to be exploding over the next several years, and where there might be some good opportunities for people interested in purchasing, and where maybe look that a lot of buyers aren't looking. So share with me kind of what you're seeing and what you've learned over the last little bit, talking to some different kind of titans of our industry and developers and all that, where you see things going.
Titans, I like that.
Yeah.
Thanks for the intro, Dan.
Yeah.
Yes, I want to take the time to do this video, and don't have a lot of time. Don't really enjoy doing a whole lot of videos, but I feel this is important, especially with how hyperactive and how red hot the Las Vegas real estate market is. This trend has been going on for a few years. A year or two ago, I thought we'd have some kind of adjustment in the market, especially when our interest rates doubled. Clearly was mistaken with that. And the market, the strength of the market and the consumer confidence has just surpassed any potential adjustments. And from what I can see now, it doesn't look like rates are going to be dropping anytime soon. May not drop at all this year. And if they do, towards the end of the year. Interest rates don't have a huge impact on our high-rise market as much as they do the residential market, because 2/3 of our transactions are cash. But we wanted to kind of share what we see in this niche of the high-rise market, and I believe there's some really big opportunities for investors, vacation homeowners, the people that are trying to tap into the short-term rental market, the vacation home nightly rental market, and kind of the Airbnb craze that's still kind of buzzing around the country, and especially in resort towns like Las Vegas. Our niche is definitely high rises. We have 23, 24 high rises that we market to, farm to, that we know very well, and we have a hyper focus on the condo hotels. That's where we sell a large amount of our product. And out of the condo hotels, the main towers where we do 80% of our condo hotel business is MGM Signature. We've sold 1,140 units in there.
And counting.
Blessed by the good Lord there, and that number's going up monthly. We've done hundreds at Trump and a significant amount at Palms. But there's the two products that I really wanted to share what I'm seeing, and from my knowledge I've been focused on these condo hotels for 20 years now, getting old, gonna be 50 this year. But there's two projects that I think are being a little bit overseen, and I think there's really good opportunity. So much to the point that I'm actually personally looking at investing back into these, and it's Palms Place and Trump Tower. The MGM Signature is the largest condo hotel project with 1,776 units or 78, almost 1,800 units in the three towers. It still is the overall preferred condo hotel in the Las Vegas market within the Las Vegas Strip corridor. And I think a lot of that is, one, it has the name, it has the branding, and it definitely has the most solid location, located just a block off of the heart of the Strip on Harmon and Las Vegas Boulevard. There's also another condo hotel MGM owns. Few people have heard of it. It's within City Center called Vidara, but that product came to market in 2000, was being sold in 2006, got caught in the downturn of the market in 2008, so there's only around 130, 140 actually, 104 individually owned units out of about a 1,500 unit project. So those have done well. Those are in City Center. We, I believe, listed the last one that came available on the market, and are there any even available?
Not available right now, no.
We've had two buyers within the past 2 weeks asking us, they want a 1-bedroom, 2-bedroom at Vidara, and just doesn't really exist because there's so few available and they just don't turn over much. But
So what is it about the MGM signature? I know you mentioned the location and the branding, but what would you say are kind of the top 2 or 3 reasons why people are still going to MGM signature? A lot's changed there in the last couple of years as far as fees and structure and things like that. But why do you think people are still going to MGM signature over the other condo hotels right now?
great question, Dan. I'd be happy to answer that. The well, again, one is the location. It's far superior to location of Trump International Tower, which it is on the Strip. It's actually closer to Las Vegas Boulevard than MGM Signature is, but it's on the far north end of the Strip. And Palms Place has incredible Strip views, but it's about a mile or a little over a mile off the Strip, I believe. So it's a little bit too far to walk to the Strip. So the location being right off of Harmon and Las Vegas Boulevard is definitely a key. But the other factor that is really driving sales as of the last few years is the short-term nightly rental and having the option to do your own management, bring in a third party, which is huge. And this is where we're seeing a lot of the attraction. We have 5, 6, I mean, you handle our buyers, at least 6, 8, 10 buyers a month coming in wanting to buy a short-term rental property, Airbnb property. They usually start with homes, but we quickly educate them that Las Vegas is one of the most difficult metropolitan cities in the country to legally own and operate a short-term or vacation home rental. And a lot of that is just due to the restrictions that Las Vegas, that unincorporated Clark County, and Henderson have put in place, because the casinos still run the town. And they want the guests and the visitors staying on the Strip. They don't want them off the Strip because they lose the gaming, they lose the retail, they lose the restaurant and dining. And so it's really strict. I believe, I don't remember the exact number, but I believe there's like 8,500 identified short-term nightly rentals in Clark County, and I believe there's only 800 or 1,000 right now that are actually legally licensed.
Yep.
So it's a small percentage that are operating legally, and they're starting to crack down, but it's going to take some time to catch up on all that. But I think I got off track a little bit.
Yeah, a little bit. It's so we were talking about kind of some of the main things that make MGM one of the
Right.
more desirable. You mentioned the location, and the location I feel like has even improved in the last year with the Sphere getting lit up, and then obviously the Formula One as well. But the flexibility with the nightly rental, that's definitely a big factor. And I think the other thing I think of that comes to mind for me is the brand association. When you think of Las Vegas, MGM comes to mind, and not necessarily a knock against these other condo hotels, but I think the brand reputation definitely means something to people being associated with an entertainment brand like MGM.
Absolutely. You think of Las Vegas, and if you think of casinos, resorts, MGM is usually one of the top names that pops into the consumer's head.
Exactly.
They know the brand, they trust the brand, and that's why a lot of people, when they buy these condo hotels at MGM Signature, they start with the in-house rental program. They don't know there's 3, 4 really solid third-party management companies that charge about half the fees and on average net more income, but the consumer doesn't know them or trust them, and so they trust the MGM. So their tendency is to start it out with that until they're there a year or so and they're like, well, we're not making any money, and then they start looking at options, or we do rental analysis for them and show them some of the other third parties. So I think that's one reason. The other reason, like you said, the location and what is around MGM Signature. You got the Formula One, you got the corporate offices, the pits. It's right on a part of the track, and that's what, is it 10 years?
Yeah, contracted for 10 years. So they've already knocked one out, so they're contracted for at least 9 more.
So 9 more years of that. Then you, right on the east side of the property, you have Top Golf, which is a really cool, crazy place. When you're looking out the east-facing MGM Signature units and balconies, you're looking right into Top Golf. The Sphere, the Venetian Sphere, which is to the north. When you're driving out of the MGM guard-gated drive, you're looking almost dead center at the Sphere.
Yep,
So that's definitely a plus. Now we have the Oakland A's that are going to be going into the Tropicana right across from Trop on the corner of Las Vegas Boulevard. That has a lot of MGM Signature owners confident and wanting to hold on to their property to see what happens with that, even though it's going to be a few years. So I think the amenities, and let's not forget, it's also a 4-star resort that is non-gaming, non-smoking, but attached with a climate-controlled moving walkway right into the MGM Grand.
Yep.
And guests and owners have access not only to each signature pool, private pool and spa area, but they have access to MGM's, like, I think it's 5 acres of pools. There's like 5, 6 pools, the big lazy river, and access right into their boardwalk where they have all the restaurants and into the casino.
Exactly.
Hakkasan's in there, so it's still, even though it's an older name, it's still they've kept it up, and it's very attractive to people.
Yeah. Now, one of the things that we've been hearing from buyers lately, in particular, is concerns about the fees. MGM's had some fee increases in the last couple of years. Just a little here and there. But a lot of people are starting to ask about alternatives, and so that's kind of where a lot of this research came from, is looking into other options for people who maybe want to either want to stay in the property 8 to 10 times a year. They're not as concerned about the income, or even just something where they can still get a decent return or make some strong rental income, and that's kind of where some of these other properties come into play. At Palms Place in particular, we were talking about it before we started recording, and we're shocked at where the prices are, even compared to where they were a year ago for the rental income that they generate.
Buy.
Exactly. So I mean, we're looking at some of these prices starting in the mid twos, which this time last year was unheard of. Why do you think someone would want to consider Palms Place as a strong rental alternative to some of the other condo hotels in town?
Great question, Daniel. Let's wrap up with Signature. We talk about Signature all the time. It's kind of our flagship project, and we know it inside and out. And really, the focus of this podcast or this interview or whatever we're going to call it here is to really highlight 2 other properties, as I mentioned. Signature's still a great place. Fees are going up all over the place. Signature, the condo hotel fees for your monthly HOA assessment, a condo hotel versus a private residence, if you do the price per square foot, it's usually about double. Reason for that is they're fully furnished. You usually have a lot more amenities, and you have the nightly rental component that you don't have with a private residential high-rise tower. So MGM's still great, still the most active, most number of transactions. We still have our highest number of listings there, and property's still selling. The fees have increased, but the income's strong enough to where owners are still cash flowing.
Yep.
And we can't forget that condo hotels are a resort product. They were never built to be a cash cow or a cash flow product. They were built to be a high-end resort product that has a nightly rental component that will offset your monthly holding costs when you're not personally enjoying it. So after the market tanked in 2008 here, these units dropped so far in value that they were just, the returns on them were strong, and they're of a hands-off investment. They have very little deferred maintenance, and so we've been flooded for the last 13, 15 years almost with investors.
Yep.
But as the market's recovering, we see the single-family market has been crazy here. We're seeing strong double-digit appreciation for the past 3 years. There's a lot of premium locations in town. Henderson, Green Valley, Summerlin, where you're seeing homes has almost doubled in some cases in 3-4 years.
Yep.
And the difference is the high-rise market hasn't. And I would say overall we've seen in the past 2 years would you say I'm estimating 15 to 20% appreciation overall?
I'd say that's about right.
Where in the single family market, it's been, past 3 years, has been 40, 50, 60%. And so there's a lot of opportunity for people that are open to tower living, high-rise living, and even mid-rise condo living. As you get out of the stick development where they're building with wood and stick, and they start going over the 5th, 6th, 7th floor, and they go into an actual high-rise product, the cost of construction increases about 30%. And so it's a different price point. And the other interesting thing that we've been seeing is we're just starting to see development of high rises, projects getting approved, developers finally being able to make numbers pencil. It's the first time that we've seen this in about 15 years, which is really crazy.
Yeah.
There's actually, I believe, 2 or 3 new projects that are approved. There's the Pinnacle by that Four Seasons, as imagined.
Yeah, back here in McDonald Highlands.
In McDonald Highlands, up in Henderson, behind our office. There's also the new one in Symphony Park that my buddy Bob Hamrick's the broker on. That Cello Towers, and they're in downtown, which is going crazy as well. A lot of people think downtown is older, it hasn't developed, it's lower income, but there's like $100 million in development just in the medical district alone on the books. You have Symphony Park coming up, you have the art district, there's a bunch of huge art galleries coming, that's all getting built up, and we're working with a couple developers that are looking at a couple projects midtown, downtown, and even off the Las Vegas Strip corridor, and their building costs with land acquisition building is anywhere from $800 a square foot and up. And I think where the value for some of these condo hotels is they're still selling at 50 cents or less on the dollar from where they were sold new in the mid 2000s. Like Palms Place in Trump, we were just looking at the inventory. You can buy 600 square foot, 550 to 615 studio. The list price are down under the $250,000 range, which is mind blowing. I can't believe that these things are actually sitting on the market.
Yep.
And what's happening is the inventory is starting to build up, the values are starting to soften, and these numbers are working again for investors. And better yet, for the true vacation homeowner, second, third homeowner, it's just a great opportunity. These prices are less than 50% of replacement costs.
Exactly.
They're probably 40% of replacement costs, so you're never going to see a product built like this. And the new developers that we're talking with, they're talking $1,000, $1,100 a square foot and up.
Yep.
Just to make a profit and make the numbers pencil. And that's that's not even a condo hotel.
Exactly.
That's just a true residential property that isn't being fully furnished. So I really like Palms Place. I really like Trump Towers. We're starting to send this out to our high-rise database, to our investors, to a group of our high-rise buyers, because we believe these numbers work, and I think there's very limited risk and very limited risk liability of parking money into these with the long-term appreciation, the depreciation you can take on the property, and they're a fully furnished hands-off rental.
Yeah, well, and I think that's the other kind of value that we've seen in these that maybe kind of got swept under the rug before, because we've had so many people looking at just purely the numbers, the rental numbers. But as a team that is a resort and second home vacation property specialist, a lot of the people over the next several years that are going to be investing in these or looking at some of the new inventory that's going up downtown and midtown, they're going to be people that are either vacationing here or with this new Brightline rail that's going to be coming from Los Angeles, I think we're going to start to see some 9 to 5 commuters that want to live here on the weekends but work full-time in Los Angeles or other parts of California.
No state tax, get the tax benefits,
Exactly.
Being a Nevada resident.
And so I one of the things that we were talking about before is like, where's this demand going to come from? But when you start to kind of see the vision and all these pieces coming together, opportunities in our current existing high-rise and condo hotel inventory. It feels like a steal compared to what we're going to be seeing built, and how much the city's going to expand over the next decade. So why would someone want to go after something like this as opposed to a single family home? I know we talked about the nightly rental component, but outside of that, why would someone consider a high-rise condo or even a condo hotel unit over a single family home, that they could buy in Summerlin or Henderson
Right.
or something like that?
Well, it really depends on the type of buyer it is. We continue to be flooded from California. Just groves of people are continuing to come over. People relocating, changing residency, vacation home buyers, a lot of investors. For the last 20 years that I've been doing these high rises in Vegas, at least 2/3 of our total clients are from California. It's always been like that, and I think if anything, the percentage is increasing. And a lot of them are trying to get residency. Of course, we have the people that still live in California but trying to get a property here and trying to get residency when it's not true residency. Condo hotel isn't a good product to do that with. If it's someone that's looking for, if it's a relocation of a family with children, there are high rises that are great options. I mean, you take one Las Vegas, down way south on Las Vegas Boulevard. I actually own some real estate in there. It's done well. Rents are good. It's a local feel. It's off the strip, so you don't have the hustle and the bustle of the strip corridor. And you can buy a 3-bedroom, over 2,000 square foot unit there for just over $500,000. And our entry level homes now that used to be, 1,300 square foot, 3-bedroom, 2.5 bath, 2-story home that used to be able to buy at $250,000 to $300,000. Those are now starting at $450,000, $500,000.
Exactly.
And so I think that's attractive to families and to homeowners, but it's still the largest percentage of these high-rise buyers are going to be the vacation home buyers and the investors. The numbers still work. With a long-term investment, you can't go wrong if you buy a solid product in a strong location, desirable location, with when you're buying at 50 cents on the dollar or less than the replacement cost.
Yeah, exactly.
And so these these units at Trump Tower, 50% of the country loves them, 50% of the country hates them. Whatever side you fall on, to each their own, right? But that probably does have some impact on the value because it knocks out a percentage of people that won't buy there. But Trump is very well run. It's a complete hands-off investment. I would say it's by far the most well kept up resort because it's a double-edged sword. They don't allow outside management, third-party management. I shouldn't say they don't allow it. They do, with a very hefty daily penalty, which prevents anyone from making their numbers work if they're investors. So Trump manages it. They have a pretty clean management system. They're getting strong returns on it. And it's a complete hands-off investment with very little deferred maintenance.
Yeah.
The other value there is they've just refreshed all the units. So it's very meticulous, very classy, very high-end. And you can buy a studio on the 24th floor, 27th floor for under $250,000 right now.
It's a steal of a deal over there, and we saw kind of the early stages of this refresh going on, and even though it was just a few changes, it really makes a big difference, and I think over the next half decade, 10 years, we're going to see the wear on those units show a lot less. The changes that they made are much more accommodating for transient guests that are staying in the units. It's not going to look as tired and beat up in 5-10 years as some of these other condo hotels. The amenities are top level. The amenities at all these properties are really good, but I feel like the standard that Trump holds, their common areas, their amenities, the restaurant, it just kind of seems like it's on a different level. The other thing that I think about, especially when you're talking about vacation properties and second homes, is security. In a high rise, you have a tremendous level of security because They have gates. They have a gate with security guard at the front. If they also have front desk security. They'll usually have fobs that you have to get into the elevator. So it's not like any Joe Schmo can
And you
just
can only
walk
go to
in.
your own floor.
Exactly. Whereas in
Can't
a
be
single family
meandering.
home, you could have a single family home in a really high end neighborhood. Somebody could hop the gate, get in the back, whatever. And
I
so
can testify to that from last weekend.
yeah, exactly.
I had that experience.
So I feel like the security, especially for people that are only using it, maybe they're there for a few weeks at a time, or they're there, 6 months of the year and it sits for the other 6 months. The security on these is fantastic, and part of the reason why the fees are what they are. But as far as these towers, we get people all the time that say, hey, why is it that the values in Vegas are what they are when, I've got a high rise in Canada, or I've got a high rise in Florida, I've got a high rise in another market, and these things are so much more expensive. I think for a long time we've had a hard time justifying that, but with all the investment that's coming into Las Vegas right now, we kind of feel like this is a unique window of opportunity for people looking to buy. Maybe they're not necessarily interested in the new stuff, but the existing inventory by comparison is going to be a steal of a deal for however long this lasts. What do you see as kind of where the city is going? You mentioned some of it. Where do you see the most opportunity right now?
Well, I think the Las Vegas as a whole is really, in the last 2 years, is really moving in a different direction and a different level. It's always been seen as the entertainment capital of the world, Sin City. What happens, what is it? What happens here stays here.
Yeah.
It kind of just used to be a little playground, right?
Mm-hmm.
But now with the amount of tech coming in, the amount of the medical, the pro sports team, it's exploding. It's a true metropolitan city. It's in a great location adjacent to California, Arizona, Phoenix, Utah, and it's the dynamics have really changed.
Mm-hmm.
And I'm much more confident now with these condo hotels and this high-rise product, letting buyers know this is the opportunity. People should be buying these right now. Trump Tower, Palms Place, Signature, I'm a buy. I think you'd be silly not to. You take these prices and you put this product, like a Trump Tower, you put it in New York, Chicago, Palms Place, they're at least double, if not 2.5 times the price. Mm-hmm. And our city is headed there.
Yeah.
And so people that buy these, they cash flow positive right now. People that are looking to diversify money out of the stock market. We do a lot of international people that trying to get their money out of the country and just basically park it. It's a great place, as you know, we deal with a lot of that. Mm-hmm. And I believe in 5 to 7 years from now, I would be shocked if these values aren't doubled. Especially in a strip corridor location like that, Palms Place and Trump. I really like both of them. Obviously, we love Signature. We sell a lot of that. But to get these prices where they're under 300 and not just under 300, they're now getting under 250,000 for a decent sized studio. It's just kind of a no-brainer to me, and that's kind of the whole point of why we're talking about this.
Yeah.
We want to use this to educate our clients. We want to use this to educate new owners. And so if you're someone that's looking for investment property, vacation home property, and you've heard about short-term rentals, Airbnb, nightly rental, vacation home rental, don't quite understand it, how it understands in Vegas, just reach out to us. We'd be happy to educate you. We have all kinds of educational material, content. Jump on the phone at any time, do Zoom, Google, free consults. But this is a buy property right now. Owners that are sitting on these, we're back to the days where we recommended owners, if they don't need to get out, hold.
Yeah.
I wouldn't sell one of these studios for $250,000 unless they have another investment or unless they need the funds. The beautiful thing about condo hotels, it's almost like a commodity because 90% of them are cash. Our average escrow on our condo hotels is about 18 days. And we can get people their money out in as short as 5 days if they want it. I mean, I think we've done them in 2 to 3 days before.
We have.
But so I like Palms. Palms and Trump are a little bit different. I just want to touch on that difference. Trump is a little bit more upscale, a little bit more glitzy, attracts a little bit more of the older professional type clientele and some families. Very well kept, good location on the north end of the strip. It doesn't have balconies, where Palms Place and Signature do have balconies, but well kept up, complete hands-off rental, and just a very overall solid property. Palms Place I really like as well. The big selling point on Palms Place is you're free to do whatever kind of management you want, and that's really attractive to our average our average high-rise buyer right now, especially the condo hotel buyer that's looking for vacation home rental, resort rental, nightly rental, and because they can choose, they can manage it themselves, and we're seeing more and more owners, investors that own 3, 4, 5 of these in multiple different cities, all over the country, from Florida to East Coast to Hawaii to mountains in Utah, Wyoming, and they're using them. A lot of them are retired people that are using them as an income source, diversifying their portfolio, and they're staying in them 2, 3, 4 times a year, and they're making money, and life is great.
Yep.
So it's really attractive to that, but Palms Place is kind of a different. Palms Place is a little bit more kind of posh, a little bit younger crowd. They've done a great job. The entire Palms Place resort has been rehabbed. It's beautiful. The pools are crazy and beautiful, and so it just has a different feel. Younger crowd, a little bit more of a partying type crowd, but the overall condition and units aren't kept up to the standard of Trump because the management options. When you allow third-party outside management, the hotel operator loses some control of the upkeep, of the housekeeping, and so that's the difference at MGM and Palms, is people are making more money because they have those options, whereas Trump controls it all, but the units are a little bit more worn out. They need more upkeep. They need to be updated, and so it just really depends what the consumer is looking for. The other great thing about Palms Place is the income is very strong. The units are very large for a condo hotel. Usually a condo hotel studio averages 500 to 550, and at Palms there's 615, right?
Square footage.
Yeah, square footage, 615 square foot, and most of them have very nice balconies. The strip facing units that are facing to the east have incredible strip views. Panoramic, you can see from all the way downtown, all the way down past Mandalay Bay, because you're a little bit more than a mile off the strip. So if someone's looking for the views, Palms is great. Palms also has another really cool feature. It's like Signature, where it has climate controlled and closed walkway right into Palms Resort, which is like beautiful. Restaurants, got a high-end steakhouse there, got a cool movie theater, large movie theater.
Big movie, IMAX movie theater. Yeah, really
IMAX.
cool. Yeah. And a wide variety. They have a nice food court where if you want a quick bite, you can get it there, but they've got a wide variety of restaurants, great dim sum place, Michelin rated dim sum place.
Michelin tires?
Yeah, Michelin tires. No, Michelin star, I can't remember what it's called, Tim Ho Wan. But yeah, really good dim sum place, good barbecue, Mexican food.
You like
they
dim
have a
sum?
buffet. I've never actually been there.
No, but you've had dim sum?
I've never had dim sum.
Oh man,
But
I like chicken feet.
oh, there you go.
Not many people do. I mean,
Yeah,
I don't
no.
think a lot of white people do, but I
No.
like them.
I've had chicken heart, but not chicken feet.
Yeah.
Interesting.
You
But-
gotta clean them good though, because they got a lot of poop on their feet because they walk around and
Walk
use the
around
kennels
in
and
a mess.
scratch around for food.
But Palms to me, yeah, especially with the updates that they did when the San Manuel tribe took over a couple of years ago, they put some upgrades into the property, and to me it represents more of a total resort package, kind of like what you would see at MGM Signature. But if you don't want to go to this trip, you don't have to. There's nothing that you'd really be missing out on unless you want to go to like Gucci or a high-end shop or something like that. But Palms,
you can go race the high-speed go-karts right across
exactly.
the street.
You got the go-karts, K1, I think.
K1.
And then on the other side, you got a dispensary. You want to go smoke some weed and then go to the Sonic next door and
those
get
are everywhere.
shakes and stuff. But you can't get that on the Strip. They don't have dispensaries near the Strip. But yeah, a lot of all it's Palms to me represents kind of a more totally inclusive, kind of like you would get at MGM Signature, but maybe not quite as pricey as what you see on the Strip. And Trump, to me, I think the nice thing about Trump is they've got a great restaurant. They've got the Fashion Show Mall right across the street, quick access to high-end luxury properties nearby. If you want to go to a casino,
Fashion
you
Show
want to go to a
Mall
nice shop.
right across the street.
Exactly. And so I think those are both two really good options for people either looking, like you said, for a condo hotel to offset some of their costs with the rental program, or even just to treat it as a second home or a vacation property. We get so many people that we talk to, and it's kind of it was surprising to me at first when I started learning about this product, but there are a lot of people that love to just buy these and just use it as a personal vacation property. They'll deal with the fees and all that, and they just want a nice place to stay. They don't want someone sleeping in their bed. But to have something that's turnkey, fully furnished, you can get turn down service anytime you want. You can request that. Some of these have room
Can you get
service.
turn up service?
Well, that's an extra fee, yeah.
Got it.
But depending on who you call, yeah, you can get that as well.
Man, I just love these prices. Palms Place,
Yeah.
Trump Towers, multiple studios. Let's see, Trump has 1, 2, 3, 3 of them at $250 and under, and Palms Place has 1, 2, 3, 4 at $248 to $250, and you just can't go wrong on these for a vacation home, for investment. And so anyone has questions or would like to find out more, we're really in tune with the rental income on these different products, the different options. We can provide rental analysis before you jump into purchasing. And even if you've thought about it but you're not sure, just contact us and we'll educate you on the different opportunities, the type of income that you can make from them, and the different types of income options for managing them.
Yeah.
And so I think that's about all that I have to share for now.
Yeah, and I guess the last thing that I'll kind of finish with is, who you work with in this particular part of the market. It matters so much. This is not just like going and buying a single family home in a community. These are very specific properties that
Every Tom, Dick, and Harry real estate agent can do it.
Yeah, exactly. But there's a lot to understand about fees, programs, how things work, and so I would encourage you, if you want to learn more about these products, contact us. I hate to sound so salesy, but who you work with really matters. We know the intricacies of this market, this niche of the market, and frankly, unfortunately, we've had a lot of people that have sold this product with us that have said, I wish I had known when I bought X. And so I would say the more information that you get ahead of time, the better prepared you'll be, the more apt you'll be to see opportunities in the market. That's why we're the #1 high-rise team in Las Vegas. That's why we're the #1 condo hotel team in Las Vegas. And so you should set up a consultation with us to discuss before talking to anybody else. So
Las Vegas high-rise, great opportunity. God bless you guys. Have a great day.
Thank you.